Patrick Karim, my trading warrior brother. Really great to have you back. Appreciate you being here this time of year when most people don't want to be bothered, and looking forward to what you have to present today. How are
Hi,
you,
Dale.
Patrick? Hey,
Hi,
buddy. How are you?
Merry Christmas, Happy Holidays.
Same to you and yours.
Thanks. Well, look, it's yeah, I try to slow down a little bit during the holidays, but charting is like in my DNA, so I can't, I
Yeah,
always come back to
can't
it, always
stop.
have, yes. It was funny you guys were doing the USD CAD because I think I wanted to start with that currency just to set a little bit the tone of the macro capital flows between those countries' currencies. Maybe I should start
Okay.
by I could share my screen there.
Yeah, go ahead.
But I'll do the USD CAD, but I'll show you guys why it's important, and I won't go lower than you guys see my screen? Yeah.
You got it.
This I've been keeping an eye on this because back in even here, there was a rising trend line. The USD was starting to put in these massive, I call them like exhaustion wicks. Like,
Okay.
okay, like that was crazy. Then it broke down. We all thought it was
Yeah.
to the moon, maybe like at this stage here, but then it went back up. Right now, it still looks like a bear market rally or at least a consolidation pattern. So essentially, the USD CAD has gone nowhere for since 2015, right? It's just that pair has gone just sideways. It doesn't have the
Oh,
upwards momentum anymore. The 1 year and three
yeah.
year, they're just like oscillating. But
Yeah.
this is what's been happening super recently. And look at this, man.
Well,
This,
yeah. Taking it out.
yes, yes. So that
And this
rising,
is bullish precious metals, and this
well,
is why you're paying attention to it.
that's right. So what I'll do,
Okay.
I'll do CAD USD. CAD
Okay.
USD just to flip the
Yeah, that's a futures contract. That's how they trade it. Yeah.
to flip, but I'll
Yeah.
overlay why this is important for precious metals because I could put the here's the ASA chart. The ASA chart is a precious metals fund that goes back all the way to the 1960s.
I remember it. They're South Africans too, aren't they? ASA?
I don't know
Okay. Well,
where that
I
fund
think they
is.
are. That's why it was SA, African
True.
South.
Okay,
See,
now it makes
so,
sense.
check it out.
And check out like at
Okay.
least recently, the ASA chart has been tracking the capital flows as defined by the currencies between the CAD and the USD. But look at this thing here. So this is it's supportive. If the CAD could continue its comeback versus and even do a rally just like it did from the abyss of March 2020 all the way back to 2021, man, look, even the miners have been showing some type of strength there.
Yeah,
Well, I can't,
they have. When we had that big reversal in Asia, Patrick, when gold made new all-time highs and spiked, I don't know,
yes,
80, $100. On the pullback in the metals, they were more severe than the miners because the miners are knocking at the door, a lot of them at the highs. They haven't reflected any major pullback like the physical did after that.
that's right. It's there's some relative strength here. There's a wall coming up. There's overhead resistance here for the CAD versus the USD, right? It has to get back above three or that's how bottoms are potentially made, right? You pay the price, you have a capitulation bottom, you move sideways, and people don't believe. But I can't say
Yeah.
we're in a bull run right now yet because this is the angle of this line dictates the probabilities of having a crazy sustained move upwards. Because let's say I just remove everything here, remove drawings. To have a crazy move like we did back in the 2000s for the CAD versus the USD. So here you have a steep descending trend line. It breaks above, but it doesn't always mean you're going to go all the way back here, right? There were a whole bunch here of periods where it went up, couldn't get back above the 3 year, got dragged down. It did a couple of times here, but eventually what you want to look for is less and less steep angles of your trend lines. And the less steep they are, the less downwards drag you have, and the more chance you have of having a flat plane breakout eventually. And then after that, you're off to the races and sustained move. So, but this is embryonic. It's great.
Yeah,
Let's see if we can build.
1999 was an important low in gold. I believe that
Yes.
that central banks came together and agreed not to sell anymore. Yeah, I think we were trading 300.
That's right, very low. And I'll
Yeah,
do now the USD CHF. I'll tell you guys why this is critical for gold. Look, the USD CHF, I'll do it. Let me do it this way. The Swiss franc. For me, the
yeah,
Swiss franc is the strongest fiat currency, major fiat currency. Everybody's talking the US dollar is a reserve currency. But look, the US dollar has been just going downhill versus the Swiss franc forever.
yeah,
The Swiss franc is so much more powerful, and I'll show you why this is important. And look at this. We're having breakdowns right here on multiple. Look, here was a break in momentum. So that's,
yeah,
you see the steepness. They still
yeah.
got upwards move, but the less and less steep. I don't know how I'm going to draw this one here, but the less and less steep these breakdown lines, see there's a rally, still upwards momentum, but now I think we've broken down a flat plane. One, two, three, breakdown. This is goodness. It's like I don't know how more convincing you want this there. It's like now we're breaking down a flat plane. This is really bad for the USD versus Swiss franc, but I'll tell you why it's important. Here's a little trick I have, guys. You do gold XAU USD gold. But if you want that long-term gold chart price in Swiss franc, you multiply it times the USD CHF. And then what you have is a long-term picture of gold priced in Swiss franc. And I'll overlay the Swiss franc on top of that versus the US dollar versus Swiss franc. Where is it? Oh, goodness. It didn't
It's
do on a
there.
good chart. Move drawings. And I'm going to do instead, I'm going to do the oh no, okay, I'll do it like this. New price cal. I'll flip the
Yeah.
chart. So essentially what we have here is, so we have the Swiss franc versus the US dollar and gold. Oh, I got
Yeah.
confused here. Just gold versus the US dollar. I'll show you why. That's what I want to show you. Remove drawings. When the Swiss franc is able to break out versus the US dollar, that was always created tailwinds for gold versus for US dollar versus gold. And you'll see, look at this here together.
Yeah.
As this is breaking out, we're having this here. This is probably the final resistance line right here. It's angled, it's upwards. If
Yeah.
ever that breaks upwards and the Swiss franc can continue its march onwards versus the US dollar, then you got some more evidence. And the CAD, right? We saw the CAD versus the US dollar. It's like those are big macro capital flows that are carving out these charts, that are carving
Okay.
out where
All right.
people
Okay. I want to ask you about your narrative, Patrick, because I know you pay a lot of attention to ratio charts. And I was, while watching this rally in gold and then this huge melt up in stocks, um, I know that you're looking for that ratio to turn in favor of gold. So since they've both rallied, what has been the outcome on the ratio charts? Are they confirming the flow of money into golds more than stocks, or is it still kind of a push that we're getting both? Okay, is that your ratio
Yeah, hold
chart?
on. I'll check
Okay,
it out. I just did this for our members, but I'll show you guys. It's worth it. This is the Russell. I'll just start with the Russell because it ties in
yeah,
between the small caps versus the large
yeah,
cap stocks, how that's behaving, and that
yeah,
how that ties in. So here's the daily chart for the Russell. Whoops, not that line. Here we had a breakdown. On the
yeah,
daily chart, we
false,
had a
yeah,
one, two, three, clear breakdown, but a false breakdown, right?
yeah,
Because now we know, and now we have a breakout. So this is very powerful. Whenever you see a huge pattern, which is supposed to resolve downwards, I was probably bearish here, but it reversed. It went right through, and now we're breaking on the other upper side. That's the market telling you something. The the bearish bias for the Russell right now, at least nominally, that's out the window right now. It's going on full cylinders. Here below is the breadth. So it's the percentage of stocks in the Russell above their 200-day moving average. And we used to have bearish divergence. But now look, the breadth There's about 67% of the stocks above their 200-day moving average, higher highs with the price. It's confirming. And now we could just be in a here, see these overheat zone where the
A
Russell
melt up.
just
Yeah.
keeps adding more and more and more of its stocks above its.
People are talking 3,000-4,000 Russell in 24.
Oh, well, look, yeah, why not? Until
Yeah.
the price starts hitting walls. Here, there's a wall at 2100. Like before I look at bigger targets, but I'll show you why that ties in to gold and silver. So now I'm zooming back. Here's a monthly chart for the Russell. Here, did a false breakdown also on the monthly chart. It hit the cloud. The cloud brought it back up, and now it looks like it wants to break out to the upside. But now, okay, this is critical. I'm going to minimize this. I'm going to minimize that for now. This is the performance of the Russell versus the SPX. This is the performance of the Russell, the bottom pane versus gold. I'm going to draw a trend line here. I'm not quite sure where my breakout is going to be, but here's a 3-year moving average. So whenever, often guys, a good trick is if ever it's messy, you haven't, you can't see really how to draw the trend line. You don't have 3 reactions. Always look at the moving average because the moving average will always be objective and unbiased. It's mathematical, right? If the price is above an inclining 3-year moving average, well, you don't need to draw anything. It's just reality, right? So right now the Russell is trying to go back up towards the SPX. It did a breakdown here versus SPX, but it's trying to go back up. Look at the dates. The Russell, guys, the small caps, is like a recovery, and it ties in with silver, which I consider, and even gold to an extent, a recovery metal. Look at the date here. This was after a huge dot-com bubble bust. The Russell drastically went down, underperforming SPX. But on the recovery, while the U.S. equities were going sideways, the big caps and going up, the Russell was outperforming.
Yeah.
So
That's
out
the
of
last
the
period. It was 20 years ago.
yes, it was outperforming. That's the last time they outperformed. So I'm looking at that and look at this, what happened here at the same time that the Russell was outperforming SPX. The Russell was also underperforming gold. So this is what you want. This is the combo. This is the combo that you want for a precious metals bull era. You want the Russell recovering. So you don't want any rug pulls. You don't want any deflation. Don't want none of that. You want the Russell really jacked up on steroids, outperforming the SPX, but you don't want it too hot. You don't want it outperforming gold. So the Russell has been underperforming gold since 2018. Now it's going sideways. It's bear marking rally here. You don't want to see the Russell overheat too much. You want the continuation breakdown. You want that breakdown line here, that 3-year moving average. You want it to hold down. So I'm keeping a close eye on that. And I'll show you how that ties into silver. Where is here, distance from moving average. I'll pop that up. Here is the distance from moving average for the Russell. So the Russell's it's moving up nominally, and that's how far it could get stretched. Whenever it's too stretched, it overheats. So you could do some TA here. Often, I use this as a profit-taking zone. Even if forget the price, when you're going to take your profits, let's say these people have 3,400. If the price goes up so fast that you're so stretched from the moving average, that's when you take profits. No matter where the price is, if ever the price is above 30% above its 3-year moving average, you take profits because it's an area here where statistically it's going to get stretched. But I'm going to overlay here silver. New price scale. Okay, where's my silver chart? Where did I put it? It's right here. I'll drag it here. I'm dragging the silver chart on top. I'll put it on log scale. We're just going to try to. So you'll see here, silver loves rallies of the Russell. You see here, here's the Russell exploding above its 3-year moving average, trying to distance itself. Look what happens to silver. It tracks it. It tracks those capital flows in the smaller cap stocks. It did it here. And here there's an exception where silver was rallying upwards, but because it did not have the Russell was not expanding away from its 3-year moving average, there was a rug pull happening, the GFC crisis. And then after that, that rally in silver was unsustainable. But look at that. Look, silver loves the Russell going bonkers, right? Look, it tracks it. Okay. Tracked it here, they track it together. So if ever, and you got to see this as fuel, because look at the tops. show you the tops in silver. Here, here. Look at these
Pretty
tops.
far away. Yeah.
Well, the tops happen when the Russell is stretched. I'll move this one here. You see when the Russell hits its distance from moving average, how stretched it is? Silver tops. Here, 2011, silver tops
Yeah.
when the Russell overheats. 2021, uh, silver's in topping here,
Yeah.
the Russell stretch. So now the way I see this is possible if silver nominally is able to break out on its own chart merit, there's fuel for
Right.
silver to go up alongside the Russell on the next rally up until the Russell tops. And then after that, um, that could bring some headwinds to silver. So look,
How, that these are good charts. Uh, what about I know you followed Dow gold ratio charts. Um, is there a message there over the last couple of months like there is in Russell? Because Russell's really been exceptional compared,
let's do it.
and I mean every indice has been exceptional. So
Yes. Look, we know the Dow. I'll show this to people. I'll put in new pane. Okay, below is the Dow. The Dow is bottom left to top right, right, for forever. I'll remove this.
yeah,
Here, look at the bottom, guys. This is the Dow.
yeah,
But
yeah.
when the Dow goes sideways or even going up nominally, here you see I had a great, a nice run here. It was above all-time highs back in,
Oh
look at
eight.
that. It was even a breakout. So
Yeah,
2006 to 2007, it overheated.
yeah.
But look at its performance versus gold during that period. It was going down, 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 down. That's, you always have to see, even if you have a stock that's going up nominally, compare it at the very least to another asset class. Gold's great because gold tracks your purchasing power inversely. And then you'll see, is the Dow going up because it's just so it's the Dow, it's invincible, or is it because the units you're measuring it in,
Yeah,
them they're
are
losing purchasing
weakening.
power? It's an
Yeah,
illusion, right? All these are ratio
it
charts. Even the
is.
Dow, it's a ratio. It's a Dow, one share of Dow. How much USD units do you need, right, to buy it? So if you're
Great
underperforming
point.
gold, but you're going up nominally, that's not the best environment for growth stocks. You want to be like here, so you want to break out versus the gold. Then the rally has this rally here from 2012 all the way to today, or even until here, it has full steam ahead. But
Okay. You have any
this is
targets in mind for 24?
targets for the Dow nominally.
No, for gold and silver.
Well, gold has a weekly defined breakout, a monthly defined breakout. I'll pop up gold. Let's switch gears to gold. Here is the monthly.
Yeah,
We had a breakout last month, right?
yeah,
Even here, the wicks, you see its noise, see that crazy up and down.
yeah,
It
yeah.
just, that's, look, it did the same thing here. Like there's a whole bunch of these doji, like indecision months. But when those
Right.
happen above an inclining 1 year moving average, above a 3 year moving average, above the cloud, the bias has to be bullish, especially that now you have this clean breakout line, which is support. So that's on the monthly. On the quarterly, look at that. We could be getting,
Yeah,
and that's an aggressive rising trend line. It's like popping a pimple there. It's like the pressure, it's a pressure cooker. Either often they could go up and then bam, just trick everybody. But if ever it survives a pullback, eventually it could be a pullback. If ever it survives a pullback, then those are super bullish. People don't believe them. They're aggressive. The pressure is just building up and just it pops it up. You had another one here. See here how aggressive that was on the quarterly chart. It's aggressive, right? It
yeah,
pops it up. That's the quarterly. We might get this in a couple of days. Here, I'll put the semestral chart. Look at this thing. Look at that thing. You could even make a case that well, it's not a clear trend line, but it's moving up, man. It's moving
yeah.
up. Maybe I could draw it like this here. One, two. I don't have three points, but it's definitely not breaking down. Right? You can maybe make a case. You had a flag here. It's breaking out, but look at that semestral chart above, above. The
Yeah, so
yearly.
you
Look at the
can't even get
yearly.
cute and wait for pullbacks then.
Well, no, I wouldn't wait for a pullback. Like this. Okay, this is my. I thought about this a lot. Here's a yearly chart. Look at that. We'd have a yearly confirmed pull
Yeah.
flag, continuation breakout. So if you want to know what the target is, just like in the, like,
Yeah.
that's the target there,
20.
2,750, just on the
Okay.
yearly chart, right?
All right. Nice.
Pullbacks, this is my thought on pullbacks there. If you have a confirmed breakout, you have a confirmed breakout. I'll just go back on the monthly for gold. I'll just show you what happened. Remove drawings. Here was the confirmed breakout back in June of 2019. You buy the breakout. Yes, you're above the 3-year moving. You're above the breakout line. I'm going to wait, get closer. Don't get greedy, guys. This is it. It's the breakout. If it's truly to be the breakout that it's supposed to be, it's not going to come back down. But sometimes 80%, well, most of the time you do get a pullback. Then maybe you could add on it. You could wait, and even then, sometimes a pullback could just be a false breakout, and then it goes back down. So you still have to wait until the pullback completes its pattern and then moves up, and then
Okay.
you'll be buying close to where you were. So I would definitely
Yeah.
buy the breakout as is. If you want to, if ever there's a pullback and you want to add more as the pullback's consolidation above the breakout line, which is now support,
Where's
materializes.
that price? What's
They,
that?
they
Where's that line come in?
for gold.
Yeah.
Well, there's no right now at this
The
stage.
breakout line. Breakout line.
Here the
Or
breakout
the
line is
horizontal
at
line. Yeah.
it's at 2000
2000.
there.
Okay.
The breakout line's 2000. You can make a case that the pullback is done already because you see I have a
Yeah.
wick intra-month wick there where they came
Right.
and tested it. That could
Yes.
have been your pullback,
Yeah.
but you could have a longer term pullback. Sometimes could go up and then we could go down 3 months, retest it from above a little later, right? It could go up like
Yeah.
this, but that's
Yeah.
like 1 month, 2 months, 3 months.
You have a 20 technical target in silver, similar to the way you computed gold's
Yes.
upward target.
So what was that? That was I'll put my silver quarterly chart. Okay, here I have drawings. Cool. Goodness, look at
Nice.
that. It's a
Yeah.
it's a war zone. Let me just clear that
Well,
up.
that's why I call everyone a warrior,
So here's the
because it
quarterly
is.
chart for silver. I'll just remove the cloud. I'll put on the
Oh,
line
look, you have
chart.
this. The space shuttle is on the chart.
Yes, always a space shuttle to make it even harder for traders to control their FOMO there. I'm not helping anybody when I'm doing that. Right? You should never, that
Anyway, I
doesn't
like
help
it.
at all.
I like the spaceship.
I
Anyway,
like it also. It makes it fun a little bit. It's like I know the trolls, you put spatial, but let me have fun a little bit with this. So here's the quarterly 1, 2, 3. Look, it could be we could have a quarterly defined breakout with this angle. It's not the final breakout line, right? It's not a horizontal breakout line. There's a huge wall at 28. We all know this. But that momentum, as defined by that descending trend line, we could potentially have a breakout. So the immediate target would probably be around the $27, $28. Yeah, that would probably be it. Especially if gold breaks out, then that is more clues that silver is probably going to run past this wall here, and the target would actually be a little higher up there, $35.
okay. Great presentation, buddy.
It's all I look at this stuff all the time, and we keep revisiting the charts, and we keep learning. Every time I think I know something, then I see, oh my goodness, and things change. Well, you've seen this, right? Like
Yeah.
relationships that were working back in the 70s, they changed during the 2000s, and now in the 2020s, and going to 20 in the 2020 and 2030s, it's slightly different, right? The TA always works, but the danger we fall into is that bias, like always trying to apply what previously happened to today. It's
Yeah.
never quite the same, right? You got to respect the market, the price action, and just get some good risk versus reward setups, play them. If they fail, well, you have your risk money management and just move on to the next trade.
Great advice, Patrick. Best way for people to follow you and Kevin.
Bad Charts One on Twitter. We have a website, northstarbadcharts.com, guys. And that's
Okay.
where we have all this stuff there for our members. But Bad Charts One on Twitter, that's where it starts.
Okay. You have a YouTube channel too.
Yes, true. North Star Bad Charts, a YouTube channel. We host people. Recently, we had Michael Oliver on. It's always like, and we could have you back on soon, Dale, there if you want to.
Yeah, let me know.
Yeah.
I'm
Okay.
open to entertaining you.
I love it. I love being entertained.
All right. Well, Patrick, I really, we've been talking, it's got to be at least 2, 3 years now.
Oh,
And,
goodness.
this is the setup and what you've been looking forward to for a long time. Now it's manifesting. And I want to thank you for your contributions to our community over the last few years that we've gotten together.
Thanks.
And, wish you and Kevin much success and everything turn green and gold for you guys in 2024.
Beautiful. Thank you, Dale.
Okay. All right. My trading warrior brother, you got to follow Patrick Karim and do it at Bad Charts One and go to their website. And these guys live and breathe precious metals. So it's their year. Thanks, buddy.
All right, man.
Appreciate it. All right. I'll be in touch with you. We'll talk again in the spring. And that's a wrap, everyone. Good luck the rest of the day. Hope you enjoyed Patrick. I know I learned a few things today, and you're either growing or dying. So we're all still learning. Remember, don't just count your pips, count your blessings. See you guys tomorrow. Good hunting and adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.